This meeting is being recorded.
Good evening, good afternoon, good morning, whenever you are. This is part 11 of the Become cTrader Master webinars from TopFX. And as you possibly know, today we are going to talk about trading using a smart stop out. So looks like it will be a very interesting kind of a webinar, because we do some trading, we place some orders, we will get together all of the informations we received during the last episodes of this free webinar. So I think that this might be very interesting webinar. Let me just find out if everything looks okay. It looks like I can start our webinar tonight. So let's do some sort of trading first, and then we are going to talk about the smart stop out. We used to have one of the lessons regarding the smart stop out before, and this lesson was, of course, this webinar, this meeting, this educational webinar was made together with the leverage educational information. So maybe if you are not familiar with the with the leverage and the stop out, please refer to the one of the previous webinars. So the trading using the cTrader, how exactly it works, what can we do, how can we gather together all of the information that I've been talking about just recently about the cTrader, and make some trades, and then use some smart stop out to see what will be as one of the what will be the outcome of the trade, but as one of the precautions and the risk management tools, basically, that is inbuilt in the cTrader by TopFX. So what do I have here? Of course, my left hand is the general panel with the trade menu of the popular markets. I can trade indices, I can trade US shares, I can trade European shares, and plenty more, even the cryptocurrency. I can go to the copy trading panel, of course. I can do some automated trading. I can, of course, do some analysis of my account. This is, of course, the educational account, so there was no need to do that. Apparently there are some statistics just for the show, just for the educational purposes only. So what do we have here in the central level of the monitor is, of course, the euro dollar, the most traded pair in the forex market. And today, as we can see, we are going down quite hard, because it looks like this is the 1 hour time frame, and it looks like the market doesn't take prisoners today and wants to go lower, way lower than it started. If we switch to daily, you can see clearly that we have two more days on red here. So maybe there will be some sort of the down movement soon on the euro dollar. However, we are not going to analyze too much of this overall situation. What we are going to do most likely is, of course, making some important trades using the smart stop out system. So what do we have here on the right hand side? We got all of the panels regarding the depth of the market, trading central. So we got this very nice signals and setups from the trading centrals. We got auto charts. We are going to take a look at this one as well, and we got the calendar. We talk about the calendar for today. There's nothing. We got the symbol info, inverted rate, market hours. Right now the market which is open is only the US market. Trade statistics, of course, for all the trades, and leverage. I'm using now the leverage is 1 to 500. So let's take a look maybe at the auto charts. Let's say we are trading on the or hourly interval, and what do we see here is some sort of the pattern. The pattern name is a channel down, and as you can see here, we got this movement to the downside in the 60 minutes interval. If we open chart, I'm just wondering whether this will be no, it's not as I wanted, so let me just go back. There you go. And of course identified at 6 p.m. so not that apparently long time ago, only about 2 hours ago. We got 76 candles down in the down direction. This is a continuation pattern, so the trend should continue to the downside. It's pretty very clear pattern for the in the terms of the clarification. So it's obvious. It's one of the most obvious patterns that almost every trader should know if he knows the technical analysis. And we can, of course, follow this auto chartist setup. So what do we have? We have here, we have, of course, the sell button, because we are going to trade to the downside direction. And how much should we trade? If we hover around, again, great tool, great risk management tool, we can see that if one micro lot, the P value will be 10 cents, and of course trade value will be 1085. For buy, for sell, the difference is none. Commission, of course, we will pay 3 cents, and the margin required is $2.17. The margin available is 3,501, so plenty of margin available, which is why we are going to trade half of the lot. So for the half of the lot, we got the USD. We got, as you can see, we got $5 pip value, and we need $108 margin for the sell position. I'm fine with this. And if you want to quickly trade this pattern, you click on sell, and your trade is on. And of course, what we do here, if we close this window and go right to the down to this panel. If you don't see this panel, please pay attention to, let's say, this window here. As you can see, this one, it's a trade watch on the bottom. So if you don't see it, maybe you got something like that. So please tick on the trade watch, and you should be able to see it. If we get rid of the active symbol panel, of course, we have this trade watch panel very wide, and what we can see here is, of course, the details regarding our trade. The balance on the account, the equity right now is a little bit slower. Margin 108.2, and free margin is 3,393. Margin level 3,000, over 3,000 now. And look at this smart stop out. Smart stop out is 30%. So let me just after we open this position, let me just focus here just a little bit about the basically the smart stop out order. So as a trader, you possibly know that we have two types of the stop out. You can think of a stop out as a certain margin level, okay, denoted in percent, of course, certain margin level at which your broker, basically, we are of course trading with TopFX, which the broker will start to automatically close you open positions. Okay, so the stop outs, there are two kinds of the stop outs. The first one is fair stop out or smart stop out. Both of them are triggered when the margin level of your account drops to or below the designated stop out level, the stop out level, can only be determined, of course, by the broker, and we are using 30% as the stop out level. You can view your account margin level and the stop out level in the balance in the trade watch panel here. As you can see, I'm keep hovering around this level for you guys to see this. Of course, the balance tab also contains information about your account balance, as I said, equity, the available and the use margin, and the gross and the net profit and loss generated by my position. As you can see, right now I'm $24 ahead. If you hover on any field here, the detailed information should be basically should pop out as a small window. So there are two types of the stop out. What's the fair stop out? Upon your account margin level dipping below the designated stop out level, a fair stop out automatically closes at position using the largest amount of margin. Okay, doesn't matter. I mean, this position is closed wholly, and any unrealized profit and loss generated by a position doesn't affect whether it's closed when a stop out is triggered. Okay, so that's the first thing. The second thing is, as an example of how the fair stop out works, you might use any example from your trading experience, because you most likely have been using the fair stop out. If there is a certain percentage level hit, the position is being closed. Which one position? This position, who is taking the greatest amount of the margin. If I only have one position, so this only the one position is of course closed, right? So what's the difference between fair stop out and smart stop out? Well, the smart stop out, well, similar to the fair stop out, both smart stop out and fair stop out are tricked when your account margin level goes lower than the stop out level specified by the broker. Okay, smart stop out close positions that use the largest amount of margin rather than positions generating the lowest unrealized profit and loss. However, in contrast to the fair stop out, the smart stop out doesn't close the positions wholly. Okay, so what it does instead is that the chosen position is only closed partially to free exactly the amount of margin that would place the account margin level above the stop out level. So the smallest possible part of the selected position is closed, rounded up to the minimum volume step of the symbol of which, of course, this position is opened, right? So very usually it's one micro lot for the major positions that are being major markets that are being traded on the forex, which I'm referring to forex pairs: euro dollar, pound to the dollar, US dollar to the Japanese yen, and so on. And so on. So this is apparently the difference between the fair stop out and smart stop out, and it looks like the smart stop out is way better risk management tool than the fair stop out. Why? Because, as you possibly remember from your trading experience, very often when you're trading some markets, and you trade a lot of markets, as you can see, you can trade indices, you can trade shares, you can trade forex, metals, cryptocurrencies here, right? So you are exposed to various markets, and from time to time you might see that okay, you want to trade more and more, but despite of your willingness to do so, you basically are currently exposed so much that you cannot open any position. So you are in the situation when let's say you open the position, you are very exposed, there is almost no free margin on your account, and of course the market is going as usual against your against your position. So in that situation, first stop out will close the position that takes the largest chunk of the margin and close it wholly in a whole at once. That's it. The position is gone. Instead of that, the cTrader in TopFX is using the smart stop out, which will only, of course, be closing the positions partially. And sometimes, as I said, it is, for example, the situation when just a small amount of the position, for example, 1 micro lot, is needed to be closed, and then the market reverses. I bet you have seen it before when you've been trading, that sometimes it's been, you just needed 10 pips or 15 pips, and that the market needs like a space to do the movement, and then the markets stop moving against you and it goes with your positions. And very, very often that little movement the market spent basically bouncing up and down was for your account devastating, because generally you had the stop out, the automatic stop out closed your positions, and like you said, unnecessary. Of course, in the time being, you didn't know that the market will, for example, reverse very, very soon. Nevertheless, if only a chunk of the position could be closed, you will still save the money on your account, and the market would eventually reverse, right? And this is why the smart stop out is a little bit it's the greatest trading risk management tool, and of course the trading tool as well, in order to maintain the positions that are that are moving against you. Basically, that when the market is moving against you, you are short and the market is going up, or you are long and the market is going down. Very often you are getting to the point where the market or to the level the market's supposed to bounce. For example, it will be in my situation, let me just take the cross. In my situation, will be this level, right? I'm waiting for the breakout below this level, 1.0338, and as you can see, the market is now moving unfortunately in my favor. I just wanted to show you guys that well, it should be I should be long, not short. Nevertheless, I chosen, of course, the auto chart list. That's fine, and we are making some money. Nevertheless, sometimes you need just a small space, for example, below the recent low, and then the market, as you can see here, for example, bounces strongly. Yeah, you have a low, you have a low, lower low, you have a lower low. So definition of the downtrend, partial. The second part is a lower high, lower high, lower high, lower high, lower high. And now the market, after this candle is done, this is hourly time frame. Okay, the next candle is up. And you might be wondering, no, why again this happens? Why this is again happens to me? Because after this hour, as you can see, you are going up, correction, sideways move, up, correction, new high, correction, obvious high, again another obvious high. So if you would be long when this candle was made, and then you got your stop loss, for example, here on that level here, this is 08.42, then of course that small part of the candle would got you out of the trade, right? And your trade is closed on loss. But the smart stop out would close on a part of your position, and after this move to the upside, you would be saved basically, and you would make more money than you lost on this by closing the partially, for example, 1 micro lot or maybe 2 micro lots. Okay, then closing the whole position and just basically losing money, making losses, right? So I guess that this kind of money management works for me, and I greatly basically encourage you to study it a little bit harder, because it will change your perspective. It will change your point of view on trading when you start using the smart stop out instead of the fair stop out. So what do we have here? Of course, we can, as usual, we can move the take profit. We can move the stop loss. We can move the take profit. As you can see, we got the uh, opportunity to trade from the chart. And right now, I can move my stop loss to the entry level. So I'm on the break even. There you go. You got the confirmation, and now it's all about the take profit. Let me just remind you that you can move the take profit level from the chart. That's not a problem. My take profit is now 31 pips, which is 156 USD. Of course, you can do it the other way. If you click here, the modify position window will of course open, and you can easily close the position, or even manage this position by using some different kind of a stop loss. For example, it doesn't have to be the pip stop loss, it can be price stop loss. If we have a certain level that the market should hit, like 1.05, there you go. You can change this position and move a little bit lower, for example, if you want, of course, if you want to play with this. Or maybe you want to add more balance. If well, I was playing with the stop loss. If I'm talking about the take profit, maybe 1.08 and 1, there you go. Change the position, and my take profit is even lower, 41. Now it's 41 pips. Estimated profit $200. Maybe you want to place your take profit when you want to, because you want to hit, for example, $250 to hit your plan, daily plan, or maybe weekly plan, or monthly plan, whatever the plan you might have. Maybe you want to set the take profit like this, or maybe estimated distance from the current price to the take profit. Let's say it might be, for example, minus 50 pips. As you can see, this window will recalculate everything here straight on. If you want to change it, of course, you can change this position by clicking here, and of course you can use the trailing stop loss. That's a very easy thing to do as well. So change the position for the last time, and as you can see, right now I have my take profit way lower, 58 pips for almost $200. Sorry, $300 of profit. Let's see what will happen on this market soon enough. So on my stop out, as you can see, it's still 30%. Unfortunately, the market cannot change. The market cannot, let's say, turn right now straight on against me right now with this order open. Even if it does, then I have my stop loss here, and I can move my stop loss right now to the level of entry, and even if it does, then I will be on zero. What I mean is that if the market will do something like that again, for example, here on this level, so let me just is it my line, or no, that's somebody else's line? Maybe that's a market line. So let me just put my own line on this chart. Where is my line? Horizontal line, there you go. I'm talking about this level, let's say. Okay, so if the market will eventually hit this level, and then we'll do that maneuver, that price formation again, which is basically, as you can see, bullish engulfing pattern on the daily, on the hourly time frame. Of course, I'm being short. Then maybe there will be some sort of that, let's say, negative balance or loss on my account, and maybe the smart stop out will be triggered later on, of course, but we don't know how big will be the next hourly candle. For now, I'm in profit. The market is going in my direction. Smart stop out is way from being triggered. So this is basically how it works. Nevertheless, let's add another position. Let's add one more position here because I'm doing so great. Let me just add another position and sell something. So of course I can use the quick sell, and because we have the opportunity to do so, I will use the one lot only. So I will do one lot for the current sell. And I think that's the level I want to do this. There you go. I got another position. One lot this time, for example, 10, 11 pips lower than the previous level. And what I want to do, of course, because I have a predefined level, let me just play with this. I click 2 times on the take profit, and I want to hit the same level with take profit that my previous orders. So what I want to do is I go to the take profit level here, and as you can see, my take profit for the previous order is 1.0792. 92, there you go. I'm perfectly happy with this. So we got the same take profit levels for the both positions, and the trading right now with the smart stop out is really easy. Nevertheless, I'm still trying to find out what will happen if this kind of a pattern will occur again here on the during the webinar. Of course, I don't know that. I got no idea whether this happens or not. So let's just find out, and let's just wait a little bit. We still got like a 4 or 5 minutes before we complete this webinar. Let's just wait for this candle to close. We are watching 1 hour time frame. Let's just switch to 30 minutes. That might be easier. There you go. So the 30-minute candle had been completed. There you go, had been completed just a few minutes ago, but the setup is still the same. Maybe the next candle will be as red as this one. As you can see, take profit is done. The target from the trading central, as you can see, is a little bit higher at 1.0505, 1.0805, sorry. It's about, let's say, 15 pips above my target. Nevertheless, I will stick to my target, and I will leave my trade running here. But let's say you are in this situation. You are in this situation when you are now in profit, more or less. You're still making $25. That's not a problem. So what can happen right now, of course, but you don't know it, is that the next candle, next 30 minutes candle, or the next or a hourly candle can be, of course, to the upside. And if you will leave this trade open, and your stop loss, let's say, will be a little bit higher, not on the level of the entry, but let's say your stop loss will be somewhere here, maybe, or the other stop loss might be somewhere here above the high of the previous swing. You might find out yourself into the situation when the smart stop out will be triggered, but it will not close the whole position. It will not close the whole position of your account. For example, right now, partial position of the one lot would be closed. So instead of the 0.5 lot in one position and one lot in the second position, the smart stop out, if the smart stop out would be triggered, I would have 0.5 lot in one position and 0.9 lot in the second position. So one mini lot would be closed. Why from this level? Because it's lower. So if the market reverse, this one will be generating bigger loss. So the bigger margin had been needed to open this position. So it's consuming the largest chunk of the margin, which is why from this position 0.1 minute basically will be taken or closed when the smart stop out reaches 30%. So for now it's okay, but imagine yourself into this situation. The market, for example, suddenly jumps to the upside because of some news. Let's say because of some news, because someone said something, because it's the middle of the day, maybe some ECB official, maybe some Fed official, maybe some bank official, for example. The other bank official said something, made some remarks. Maybe there's some press conference, maybe there is some meeting, maybe there are some data released that you missed, and suddenly you have a spike in price because that was for some reason important for the market participants, and then of course the market returns to the previous trend. And what's happening there in that situation is, if you were using fair stop out, the one lot position, the sell position would be closed when the stop out was hit and the whole position is done. And then of course within the next 50 minutes position is, the market keeps going down because it changed his mind, or something else happened, or maybe other question was asked on the press conference, or whatever was the reason, and you of course are frustrated, are angry because of that erratic behavior of the market. Well, you can't be angry on the market, but using the smart stop out would prevent you from closing this the whole position of the one lot. In that situation, 0.1 or maybe 0.2 lot would be closed, and then during the next, let's say 30 minutes, when the market went lower, you would be still in profit again. Of course, the position will be smaller because it will be 0.5 lots the first one, 0.8 lots the second one. So that's a different situation in terms of the position size. Nevertheless, if the market would break below your point of entry, you to the downside in the direction of the you have chosen, that's the sell direction, you would be in profit. And if the market would hit, let's say, your take profit level, the amount of money you make there is, of course, greater than the 0.2, let's say, or 0.1. So 1 mini lot, or 2 mini lots taken away from your account while, for a hypothetical spike to the upside happened, right? I hope you understand what I'm trying to tell you, and I hope I'm not trying. You understand that this kind of trading, this kind of a training, that's the one thing, but this kind of a tool, risk management tool, is very big step ahead for all of the traders, especially for short-term traders, especially for scalpers, day traders, but for the long-term traders as well. Which is why in TopFX we are using the 30% smart stop out that doesn't closes your whole position, but it closes on chunks at the very specified level. In TopFX we have it sorted out this level at 30%. So I hope you understand what I've been trying to tell you by in this video, in this webinar, trading with smart stop out, how to use it, how to utilize it in your everyday trading. I guess that you might find much more information on the TopFX website, and generally if you use some kind of a search engine, internet search engine, you will find plenty of other information regarding the smart stop out. But this was one of the easiest, one of the most practical, basically, ways to utilize the potential of the smart stop out in your everyday trading. Thank you very much for watching this webinar. Thank you very much for participating to this webinar. I hope I will see you guys next week with another portion of the information and education regarding the cTrader, as we enter another Become cTrader Master level. Of course, I'm not quite sure how many of these webinars will be made, maybe only a few more, maybe even we will reach the number of 20. We will see in the future. As long as you keep coming to these webinars, I'm not willing to stop this series right now. So please keep coming to the webinars, like this video on our YouTube channel, global channel for the TopFX, which is TopFX Global Limited. You can find the previous webinars recorded as well. You can watch it as many times as you want. All of them are for free because we provide great level of the education for the beginner and for the advanced traders. So thank you very much for participating. I hope I will see you guys again. So for now, take care and bye bye.